Going, traders from around the world, literally from around the world. How are each and every one of you doing on this fine day? So we're getting some people piling in today, this afternoon, or this morning, or this evening, depending on where you are in the world. So this particular webinar, my name is Jeremy Alexander Newsome, and to the left of me on your screen, or potentially to the right, is Mandi. And Mandi is representing out of Australia right now. So it is 7 in the morning your time. 8 in the morning.
9 o'clock. 9 o'clock in the morning.
9
Jeremy was kind on me. He started with 7. I'm like, nah, you know.
Not
9.
quite. Not quite.
9.
Yeah, so 6 o'clock here in Nashville, Tennessee, Friday night. So Saturday morning over there, 6 over here. And the objective of today's video and webinar, if you're watching here live, or if you're one of the many students who are possibly watching this on YouTube, really what I wanted to do is I wanted to get together with a trader, another real-life trader, someone who's phenomenal at trading and just a phenomenal person in general, and kind of give some overview and some insights into some strategies, some discussions, some topics about how Australian traders can take advantage of the U.S. markets and how potentially U.S. traders can take advantage of the Australian markets, and for those traders who might be in Europe or other parts of the world, just what it means to be an international trader and how you can take advantage of, again, the U.S. markets. And Mandi knows a lot about that. She's a subject matter expert, at least in my opinion. She trades Forex very actively, and that's obviously something that's traded 24/7, so time zones.
The DAX.
Yeah.
And the DAX.
And the DAX. Beautiful. Yeah, because you're originally from Germany, right?
That's correct, yes. Yep.
Awesome. So let's make sure this chat pane works. Would you guys mind typing in where in the country you or where in the world you live in? Man, did you have access to that chat pane? If you click that, there's a little bit of a button that says more. So
Yes. More. Always like more. Oh, wow. Okay. Gold Coast. Yay. Beautiful part of the world. Melbourne. Hello, fellow Melburnian. Sydney. Sydney's got the best beaches. Oh my God, that's amazing, you guys.
I like it. I like it. Perth. We got a trader in Perth. Well,
Perth.
welcome.
Oh my God. That means you woke up early because Perth is a few hours behind.
Yep.
Yeah.
Chicago.
I love
it. Chicago, Illinois. What's up, Linderman? How's it going, man? Well, folks, I'm really excited. So again, kind of today or to this morning or tonight, what we want to discuss, what me and Mandi are here is we want to help enrich lives. And we want to teach and just kind of give some information really on how Australians, like I mentioned earlier, can take advantage of the U.S. market. So what I'm going to do for about really 10 or 20 minutes max is kind of discuss a potential strategy, and me and Mandi can go back and forth regarding if traders in the Aussie markets or in the country of Australia or again anywhere else in the world, what you should be looking for if you are excited and interested in the U.S. markets. Obviously, United States market, the biggest market, biggest exchanges in the world, meaning the most opportunities, the most volume, the most potential for profits. But the challenge is, Mandi, me and you were talking about this earlier, the biggest challenge is the time difference, right?
If you want to get some sleep.
Yeah, it's really, really hard because I have a lot of traders, a lot of real life traders, good friends, and really people I've never met before in the flesh. I've never met Mandi, unfortunately, yet. It'll happen one day. But there's a lot of traders in Australia who love the U.S. markets, but it is painful. So tell me, like, what's that schedule look like for an Australian trader? You're going to sleep at 11. The market opens at what time over there for you guys?
No, actually, so we have to distinguish between daylight savings or summertime and non-daylight savings during wintertime. Like we have winter now, hence my,
yeah,
my turtleneck and you're in t-shirt. So at the moment, the American market opens at 11:30 at night. In Melbourne, I have to say, because we have 3 different time zones in Australia. So if you live in Perth, it's actually much kinder. It opens at 9:30 at night. I just stick with Melbourne, Sydney, this area, to make it easy for me. And the market closes at 6 o'clock in the morning. So for me, I usually, during winter time, it's actually okay because I stay up till about midnight because I want to catch the announcements. And most of the announcements, so last night, the last announcement was at midnight, the US announcements. That's usually when the market moves. And then after that, the American market seems to stagnate and then starts moving at 4 o'clock in the morning again, unless there's FOMC, which is 4 o'clock in the morning. During summer or daylight savings, markets open at 1:30 in the morning, so I'm asleep by then. But I get up early because the market closes at 8 a.m. So there's, you just change around. So during daylight savings, I just get up and trade the last hour, a few hours, and during winter time, I stay up late and trade the opening of the market. So you can adjust. And what I see with a lot of my clients, the reality is they have to work. They have 9 to 5 if they're lucky. Usually it's like 9 to 8 or so, working really hard. They have families, so they're not able to trade the Australian market because they're busy during the day, but then they come home at night and they can prepare for the opening of the US market. And then they can put in the orders in. And so even though it's the time difference, but it's actually much easier to trade the American market because of the time difference if you are a family person or if you work full time.
Yeah, and see, I think that's a really good way to approach it, because the number one thing, even though it is a time difference with trading the US markets if you're living in Australia, what you have to consider is that really makes it easy for you, because the entire time the market is open, you're sleeping, and that leads to much less emotional decisions. Would you agree, Mandi?
Absolutely. And I love Justin wants to move to Australia. Yeah, come visit us. It's a cool country.
Yeah.
We should swap houses for a while.
For sure, for sure. I mean, it seems to me that, and that's what I wanted to talk about today, was really how you can manipulate the broker and your setup and your strategy and your systems, because the term goes, those who care least win most, kind of thing. So in the stock market, and the reason I also have Mandi with us is she is a psychology expert. So let me just hop over to her website really quick.
Thank you.
Yes, it's tradingpsychology.com.au.
That's the
And
one.
I spell
Yes.
psychology bad. So she's a trading psychology expert. So if anyone's ever battling the mental aspects of trading, remember, most traders who are not profitable, it's some kind of mental tweak. There's something in the brain that's stopping it. And with trading the US markets, the unavailability of being by the computer all day while the market is churning, while everything is happening, I personally think that's a good thing, because by the time you wake up, if you're going to sleep at 11, you wake up at, let's say, 7 or 8, the market's more or less done its thing. You've got your stops in place, and it's like, okay, cool. It's done its thing. I know what's happening. I can adjust my stops accordingly. So what I want to discuss
Sorry, if I can just add to that, there is another aspect what I find when traders work, when Australian traders trade the Australian market and they have their orders in, they're not able to focus on their jobs. So, this is really serious, because they don't perform their jobs anymore, and they might risk being made redundant, and then their dream of becoming a full-time trader is actually challenged. It's not a blessing. It's dangerous if you haven't had enough training to be a full-time trader, because it's a very different game to trade full-time than when you still have income coming in. So that's another reason why trading the US market is really useful. And apart from that, what I've found is that, as you said as well, it's the peace of mind thing. You have seen the opening, you know that for the next few hours nothing much will happen, and you can sleep and wake up early and make sure everything is fine, or have someone like you keeping them updated.
Yeah, totally, exactly. And so in regards to the strategy that I was going to mention, really, so this is just a picture of the S&P 500, the index. And of course, as you know, there are so many different markets out there that we can all trade. And we have Forex, you have futures, you have commodities, you have stocks, of course, you have options, and or something we're going to talk about later today. But the challenge simply becomes when you're dealing with any market anywhere in the world. It's all about the focus, because if you're looking at a million different things, if you're focusing on a million different things, if you have all the scanners, all the stocks, all the strategies, all the things that you're trying to implement, you're likely going to have a giant challenge really accomplishing anything substantial. The thing that most traders have a hard time with is realizing that the less that you focus on your trading, or I should say the less that you focus on your stocks, the less that you focus on your strategies, you've got to get the one thing that you're really, really, really good at. For example, if you're driving an automobile, you can only drive one automobile at a time. Or if you go to a restaurant, you can only eat at one restaurant at any given time. Even though there's countless of opportunities, there's countless cars you could drive, or there's countless restaurants you could eat at. Simple fact is you can only do something at one given time. Your brain only has so much capacity. So the objective is for my traders who are international, here's the strategy that I think is truly a lot easier than you might anticipate. And I know it's going to sound really simplistic, and in a way it kind of is. What I'm going to do is I'm going to zoom in here to the SPY, and I'm going to hide all my drawings here for a second. This is the ETF that tracks the S&P 500. So the S&P 500 in America is the Standard & Poor's 500. It's pretty much like the barometer of our economy. So if the S&P is going up, everyone in America is pretty much happy. Now, granted, 90% of Americans have no idea what the S&P actually is. They just know that, you know, it's on CNBC, and if it's green, things are good. So with this particular ETF, this is the most one of the most popular liquid trading machines on the planet. This is an ETF, stands for Exchange Traded Fund. Again, all this does is it tracks the S&P. So in order to trade this, what I want to do for kind of my traders that are here today, and again, for those who are watching, is just kind of give you an insight to kind of how I like to trade. And it's really some very, very simple steps. So first, if you look at the weekly chart, you'll probably look at it once every few months. The weekly chart is going to help you determine what's the overall direction. Are we going up? Are we going down? Are we going sideways? Determining the direction, huge standpoint in trading. So once you got the direction, obviously on the SPY, it's straight up. That's the weekly chart. You're then going to hop into the daily chart. And so once you have the daily chart, you're going to zoom in really to approximately the last 2 years of data, and you're going to draw your support and resistance lines, and then you're going to answer the exact same question. I'm going to do this with the ASX in just a second. So you have a resistance here, you have a support line here, and you got a previous all-time high right about there, and then there's going to be a little bit of a support right about there. And that's just really from very recent times. So my goal is, again, try to keep it as simple as possible. One way to do that is have a lot of very few lines on your chart. If you have 1,700 lines, every line is going to mean something. So if you have 3 to 6 lines, usually that's a really good sweet spot. That's enough lines for you to go, okay, these are the ones that are important. These are the important prices, and these are the ones you can focus on. Of course, there are other prices. And keep in mind that no support, no resistance is the perfect support or resistance. What you have to keep in mind is they all work, just not all the time. So if you're looking at a support, you're looking at resistance, it's like the way you decorate your house. Everyone decorates their house a little differently, but we all have a home, we all live in it. No one's gonna make fun of you for the way you decorate your house. So your chart is like your artwork. And once you create that artwork, you more or less go, okay, here is my framework. Here's what I'm gonna base my decisions off of. And you use this framework to get into the trades. So the daily and the weekly charts are really what I use for the framework of the charts. The daily and the hourly, the framework. And then from here, you're going to simply hop into the 2 time frames that you're going to make most of your trading decisions from, in my opinion. You're going to hop in here to the 4-hour chart, and you're going to turn what's called the extended hours on. This is a really fun tool for my Australian traders. Now, obviously, what I'm using right now is a charting software called TradingView. You might not all use this charting software. You probably don't, but there's plenty of brokers out there that offer extended hour data. The extended hours data is just showing you what did the markets do while you were at work. So if you come home after a long day of work, you got done eating, working out, reading, whatever you're doing, and let's say it's about 10 p.m. and you're about to go to sleep, you can kind of peruse the U.S. markets on a 4-hour time frame. For those of you who are familiar with candlesticks, you can turn your candlesticks on. Even if you're not familiar with candlesticks, you can still use this strategy, but I would say become familiar with them. Very, very crucial. But the 4-hour charts, have the 4-hour chart up, and really you're going to look at about the last 2 to 3 months of data. And again, you're going to have this line would already be there from your daily support resistance. This line would already be there from your daily support resistance. And then, ladies and gentlemen, you're going to implement something where it makes a lot of traders uncomfortable. But my biggest advice is it works more than you think it does. It's something that I refer to as the blind buy strategy. And it's really not difficult. Blind buying simply means that you go into a trade with a predetermined location you're going to buy based on your chart. And then you simply do it. Right? So you create a chart, and let's look at this support resistance level right here on the SPY. So this support level kind of coming from this support, this resistance, this support, resistance, resistance. You got a nice little gap right here that occurred in the US markets after the French election. And this was a good resistance, and this was a really good support. So really, when the market was trading down into that support the last 2 or 3 days, that would have been the area, that would have been the price point where you'd have had an order set up ready to buy. So the question that I have for you, Mandi, are you familiar with brokers? Is it called something different? An OCO order? Order cancels other?
Yes, we have that. Mm-hmm.
You guys have that? Okay.
Most beautiful tool.
Do you use that pretty often?
It lets me sleep, definitely. Yeah.
I think it's a super impactful tool. The challenge that most people that I've found is that most people are just simply scared that they either didn't place the OCO order correctly or they don't know if it's going to work right. Here's the fact, ladies and gentlemen, if you set up the trade correctly, it will work. There's also an order. Are you familiar with this one, Mandi? An OCO order?
No. Other one? No. Okay. I don't know OTs. So, OT, no, Otoko.
Yeah, yeah,
Japanese to me.
So this is an order triggers other cancels other.
Yes.
Order cancels order.
I think we call it differently, but yeah,
you probably do. Yeah, that's what I was kind of asking.
Yeah.
I didn't know if there was probably a different terminology on that.
I haven't used that. Maybe that's why.
No, totally fine. Totally fine. So really, in a lot of brokers, we're going to be talking about brokers in just a little bit. So that we got about 40 minutes left in the webinar. But an OCO order, what it allows you to do, ladies and gentlemen, is you create whatever your order is. So this is what I refer to as the blind position. The blind position simply means you have no idea if it's going to trigger and you have no idea if it's going to work. But that's the stock market, right? You don't have to be awake for the trade to either work or not. You don't need to worry about it. If you have practiced the setup, if you practice the mechanics, the methodology of looking into a trade, setting up the trade, and then placing the trade correctly, lay your head on that beautiful pillow and go right to bed. Because if the trade goes into your order zone, an order triggers other, what that looks like is literally something like this. If you said, hey, I want to do a limit buy on the SPY of 236. If that fills, right? So that the OCO is literally a contingency order. It says if this triggers. So if it doesn't trigger, then no big deal. But if it goes through, then what? So then you have your stop, and then you have your target trade, TARGET. You have your stop and you have your target, and you can place your stop and your target again based on other support resistance lines, moving averages, whatever you want to use. In this particular situation, you might have set your stop somewhere down here below the low of these candles right there after this gap got filled. And there's more analysis on the gap analysis. We can go into that much later. But once you have your stop determined and then you have your target, we can easily see where the next target would be. The next target is going to be right there. So if you had an OCO order set up, an order triggers other cancels other, or also called an order triggers order cancels other, then what that does is it sets you up to get triggered into the trade. Once it's triggered into the trade, you immediately have your stop and your target ready to go. They're totally open. And if your stop gets hit, then your target gets canceled. And if your target gets hit, then your stop gets canceled. This is an automated trading system, an automated trading strategy that's not very complicated. The blind buy, all you're doing, ladies and gentlemen, is you're buying at support and you're selling at resistance. That's it. And a lot of traders will often say, well, Jerremy, there's no way the system can be that simple. Truth of the matter is, the easier and the simpler your system is, the less stressed you're going to be, the less worried you're going to be, and the less you can mess it up. Because if your system says, buy at 236, or buy at the blue line, or buy at support, wherever that angle is, if that's your system, that's it. there's not really anything else for your mind to consider. If you go, hey, buy at support, sell at resistance, and you create your framework, then you can just simply, if this is your framework right here, and again, there's no perfect lines, whatever your lines are, you can create them. If SPY, let's say, for example, comes back down to this price, ladies and gentlemen who are here, could you pre-plan this trade right now, regardless of your time zone, set that trade up and simply walk away? My answer would be yes. Now, you don't have to do this exactly with the SPY. You can do this with really any trade, especially if it's traded 24 hours, like a British Petroleum, an Exxon Mobil, maybe a mining company. I know there's a lot of mining companies, and we're going to talk a little bit about that in just in a moment. But what's your thoughts on that, Mandi, in regards to just having a system that is really, really basic, trying to create something where it's almost fail-proof is not the right word, mentally fail-proof, where you can create an automated order, an automated contingency, and just set it and forget it? What's your thoughts on that?
Well, first, Justin actually acknowledged that he's using that for his options trading. So he calls it a 3-leg bracket order, options house broker. Whatever that means. But so yeah, you can see that most of us more experienced traders, we use this kind of strategy, and it usually comes after having been, through everything and tried out everything and going really into detail, from big picture detail, and then it all comes back down to being so clutter-free in your mind that you actually see those really clear structures, and to make life simple through that. I have certainly been the kind of person who tried to make it really complicated, because that was my own insecurities.
Yep.
And I projected them onto the market, and I needed to control everything. I was so afraid. But once you start trusting yourself, or for me, actually, it started working with someone like yourself, where I trusted the person and learned so much until I trusted myself enough. Then trading becomes, I won't say effortless, because you still lose and you still get annoyed about losing money, but your equity curve keeps going up, and you don't go into fear that you can never make it, or that you stay stuck in your horrible job. Like, it's a setback, and it will be fine again. So absolutely, that's for me the way to trade. And I know quite a few other extremely successful traders, prop traders, institutional traders, who trade exactly like that. They predetermine, they put in their orders. Sometimes, they don't get filled by one pip. Doesn't matter, That's the reality of it, but they get good night's sleep, and they're fully functional people, other than the ones who stay up all night trying to control their trade and trying to look for the perfect entry. That's really, if someone can trade this way, like you just showed, that's a level of maturity that is required to be successful in any venture of life, actually.
Totally. And kind of the thing that I was drawing earlier is you nailed it, Mandi, because really what most traders will do is they'll start out with a really simple system because they don't know that much. And then they might make money, and a lot of people call, oh, that's just beginner's luck. Well, then what they do is they go, oh man, I made a little bit of money. That was really cool. So then they start learning and learning and learning and learning and learning and learning and learning, and they learn everything. And then
cluttering their mind.
Yeah, they clutter the mind. And so when they're starting to look at trades, they look at 457,000 different indicators, volume, moving averages, this, news stories, this. And what happens is their equity curve goes flat or eventually goes lower. And then they figure out, oh, I'm just going to go back to what I learned initially. Now that I have a little bit more info, that's great. But realistically, ladies and gentlemen, as much as I do know about the markets, I don't know everything by any means. It's pretty much impossible. I know a lot. So does Mandi, and so does a lot of other professional traders. Most traders who are profitable have a pretty basic, pretty easy plan. And I'm not saying that you're welcome to learn as much as you want about the markets, but at some level, the easier it is to replicate, the less stressful it is. The less stressful it is, the happier you are. And the happier you are, usually the better you trade.
And the better family person you are, you look after your family better because you're happy, instead of projecting your grumpiness about the market onto your family, and so on. About the strategy, I actually, we say in coaching, how you do one thing, you do everything.
Right.
And what was really interesting to me was that I had the same shoe buying strategy. So I would go to every single shop that I could find in Melbourne, or wherever I lived, Hong Kong, Saarbrücken, and look for a pair of shoes, and I would then eliminate what I didn't want. And that story, it's really true. You seem to go back to the first shop, or at least the second shop, to buy that pair of shoes after you've been through all the other ones.
Yeah.
I don't know why that is. It seems to be like a natural law. But I used to be the same in trading. I used to start with one strategy, went through all the other strategies, and went back to basics. Yeah.
It's kind of
Interesting.
the way it happens.
And I changed my shoe buying strategy too. I know now what I want, and I look for it. No, I'm serious.
I love it.
It's interesting, right?
I love it. It is very interesting.
Mm-hmm.
And I like the thing that you mentioned, strategies, because another thing I noticed is a lot of people love trading options because of something like the SPY or Apple or Google or Amazon. A lot of traders, they want to trade the options because it's too expensive. And some people, if you have a smaller account, you want to get that leverage. You want to get something that allows you to trade it because, buying 10 shares of SPY for for $2,000 or whatever it is, and if the stock goes up 3 points and you sell and oh man, I made $27. It's not really that exciting. And at some level, it's also can be very cost effective. So the other reason that I wanted to share this webinar with everyone in Australia or everyone who's international, if you're here live or here in the recording, watching this on YouTube or from Manny's website or from my website, I learned about something interesting that I had no idea what it was. So
Until you met me.
After I met you, I want you to tell me a little bit more about what the heck is a CFD.
Okay, so the rest of the world feels a little bit sorry for you Australians, and I think Canadians as well. I'm not quite sure. We really don't need to trade options because we have what's called a contract for difference, and it's this this game that someone invented, like soccer or football in America, where if you have a CFD broker, let's say you trade the Dow is easier for me to calculate. Let's say Dow is at 20,000 at the moment. I only need to put up about 5% leverage. So how much is 5%? Let's say I need only to put up $100 to trade one contract of the Dow. Now, $100 compared to, I think you guys have to put at least $500 or $1,000 to trade one contract. Is that correct? I'm not quite sure how America works, to be honest. But for us, a CFD basically works, we get margin. We only need to put up a little bit of money. And it's called contract for difference because you have an agreement with a broker that if the market moves up, and let's say you bought at 20,000, market moves up to 20,100, you get paid on the $100, the difference. If the market moves down, you have to pay the broker the $100. It's like normal trading, right? You make money, you lose money. The difference is that we can do it on margin. It does not go into the real market most of the time. And this is how brokers can afford to let you trade on margin. That has become a real game changer all across the world because now people who couldn't trade because of lack of funds, they can trade now. So you can pretty much start trading with $200. I can trade an Aussie dollar, Aussie US, AUD USD contract for $2.50.
Wow.
It's
No
cheaper
way.
than a coffee. Yeah.
Oh my gosh.
Yeah.
It's incredible.
So you don't really want to do that. You want to make sure that you do money and risk management because the money and risk management that is required for trading CFDs is a little bit different to options. And there's pros and cons between options and CFDs. So the options market in Australia, and I'm not sure about the rest of the world, but I know Australia is not thriving anymore. And if you have people who really relate with options and love trading options, they all trade the American market now because the Australian options market is more or less dead. So not much volume because everybody's moved into CFDs. Did I explain it, or is there any more questions?
No, I think it's a solid. So tell me about the CFDs. Do they have do they have expiration dates like an option?
No, no. So it's a continuous contract. You can stay in for the rest of your life.
No way. No expiration date. Wow.
No expiration date. You do have to pay interest on the contract. So because of course, if you buy a $20,000 contract and you only put up $100, there is an interest component. But I found the interest component is much less than the profit that you can make. And the interest component depends on the interbank rates as well. So you can calculate that in advance. You do receive dividends if you're long, and you have to pay dividends if you're short.
Wow, and again, you can still get dividends if you own a CFD.
Yes. Yes.
Wow, that's incredible. Yeah, that's really wild. I had no idea. Man, so how do you go about mitigating risk with the CFD?
Exactly the same like if you buy the underlying contract. You put in an OCO order or an Otoko order, or you put in a simple stop loss. If you trade at market, let's say you would have bought at 23.60, where the spike was. You put your stop loss underneath where you would put your stop loss. Okay. So what's that? 23.60, is it? No,
236. Yeah.
And you put your stop loss at 234. That's it. Or you say you put in your conditional order, buy at 236. If that gets triggered, put in your stop loss. If that stop loss doesn't get triggered, get my profit target.
Totally.
Exactly the same. So it's really simple.
Mandi, do you know the math behind a CFD risk mitigation? So I mean, for example, if I'm buying right here, I know I could buy for like $100, and I know it's easier than options. That I do know. Because with options, you have bid-ask spreads, expiration dates, with strike price, implied volatility, delta, gamma, theta. And a lot of my Australian traders, you're exactly right. They quit trading the Australian market. They're really focused on the US. And that's why I've reached out to you, because in the last 6 months, I've gotten bombarded in a good way by Australian traders saying, hey, Jerremy, what's all this stuff with options? I need to learn about options. And they've never traded stocks profitably. So what I tell them is, hey, options are cool, but you want to first learn how to trade stocks before you trade options. And then someone might say, I agree. I think that's absolutely the approach, but I don't really have the amount of money that I think is meaningful to trade stocks, because I'd only make like 20 or $100 a month. And I go, absolutely. And from there, I'm like, I don't really know what to do. And then again, as me and you started talking, I learned more about the contract for difference. Guys, if you are not doing this, and you are an international trader, so this is not something you can do in the United States. This is not something you can do in Canada, to my knowledge. So if you live in the US or in Canada, don't worry about it. Too bad. There's other things that we can do. US people, don't feel too bad. But for the international people, which is a lot of the world, CFDs, let me show you what some of these look like. I did contact a trader. He's one of my coaching students, and this is what a CFD looks like. I will do my best to enlarge this. Can you see this, Mandi, okay, or is it too small?
Yes, yeah, perfect. Ferrari, I love it.
Yeah, so look what this guy's trading. So he's trading Ferrari, he's trading Apple, he's trading Google, he's trading Facebook, and he has some positions in Forex. So he's buying a contract for difference. Now, the important thing that I want my Australian traders and my other national traders to know is check out the price that he is spending right here. So he has a contract of difference for Google and Google for $926, Apple for 148, Facebook for 150. Now, granted, they're similar. Those are similar to option prices in America. So I could buy one contract for 148 bucks. But what you're doing is you're taking advantage of the stock movement. And again, like Mandi was saying, there's no expiration date.
No time decay.
No time decay, which is huge. And again, this is just my personal opinion. What a lot of Australian traders have battled with and have asked me about is when they're trading options, they get really annoyed with all of the minutia of options, and they have a hard time breaking through that because in order to really, really get excited about trading, you've got to start making money. It's true. That's the truth. So options are one of the hardest things you can do. Now, they're really cool. That's great. But that's like saying, I want to be a professional race car driver, but I have never driven a vehicle before. I'm just going to hop in a Ferrari. Probably not the best idea. So you want to start off with a nice 2010 silver Toyota Corolla, you know, and drive on the back roads and practice driving a little bit before you just hop into a very speedy, fast machine. So even though now this particular, I will gloat for a second. He's a coaching student. He sends me these pretty often. So he was up $315, but he's in a lot of positions, and these commissions. Tell me a little bit about the commissions, Manny, because I also don't think they're that much either.
It depends. So the commissions for US stocks is anything between 10 Australian dollars and then a percentage, but it really depends on your position size. So if I say 10 Australian dollars, that's like for one full contract and not. So you can see he has a 0.3 on. So he has a 0.3 of a contract on. And hence the position, the commission is a little less. You can see the swap. So that's the interest that we are paying for overnight holding. So he paid $6.30 in swap, but he is $200 up. So, you know, his cost is $9.30 at the moment.
Now, does he pay $6.30 of interest every day?
No, that would be accumulated. He must have, can you see when he entered? That must have been on the 1st of May, that was, right? So, if that was from, let's say, last week, that would have been, what, 3 weeks holding. I don't think it's last week, so because it would be more by now. But that's, you know, maybe $1 overnight. So depends on the broker, again, depends on the interest rates that we have.
Okay.
I just want to address Justin. Justin says suggested that US people can do CFDs. No, it's not. Every Australian or international broker is really concerned about not having American traders because America they're hunting them down. They find them. So interesting.
Well, I will say, so, and again, I can look more into this, Linderman, but these particular brokers, I know all of them, obviously Interactive Brokers. These are all brokers that offer CFD trading that traders in the U.S. can use. But I do not think you can trade CFDs through those brokers if you live in America. So I know a lot of prop traders, you mentioned prop traders earlier. This is another way for day trading. You can day trade CFDs as well. Am I correct on that, Mandy?
Yeah, you can do, you know, I scalp on CFDs. So on the DEX, I need 90 Australian dollars to trade one baby DEX contract. So
wow,
you know.
that is so wild. That is really, really cool. That's really cool.
Yeah.
So
I think they can trade CFDs on FX, but again, it's not the same CFDs that we have. It's a different product. Yeah, because as I said, America is really really strong on this one.
Yeah, so there's some interesting rules, and I don't know how long it'll change. And really, my main objective for this is just educating and informing and enriching traders, specifically in Australia, because I mentioned earlier I'm getting a lot recently. And that's why I reached out to Mandy because she lives there. But this also is available in Europe, right? Asian countries,
everywhere,
pretty much
India,
everywhere.
Pakistan,
Yep,
China.
So it's a really big deal for those of you who are watching this, because I would suggest reaching out and trying to get more information on CFDs. So since we got some time left, I didn't want to go too massively long, but Jill's asking, which broker do you use? Which broker do you use, Mandy?
FP Markets.
You use FP Markets also? Okay.
Yeah.
So here's FP Markets. FP Markets. So this particular link, for those of you who are watching this video, I'll include it in the description box below in YouTube. And pretty much the objective of FP Markets is, if you're doing CFDs, are we allowed to give Jimmy's email out to anybody, or should we just say contact us and we'll give him Jimmy's email?
Jimmy is in Hawaii at the moment,
Right.
so
Not right now. No, he's not gonna do it right now. I'm just saying
yeah.
later.
Yes, so should be fine. Yeah. Yeah.
Let's do this.
Yeah. Gives
What I will
Jimmy's
do.
email out. Mhm.
How about this, guys? Just email either myself or Mandy. We'll give you Jimmy's email.
Yeah,
So here's the thing.
exactly.
If you want more information, there's a lot of brokers out there, right? Feel free to choose
Mhm.
whomever you would like to go about whatever route you want. FP Markets is a broker that offers a lot of trading opportunities for a lot of
Mhm.
international traders. You can email me, Jerremy with 2 R's, Jerremy at reallifetrading.com, reallifetrading.com. And I'll give you the link to Jimmy. Jimmy was the guy, one of the gentlemen who explained also. And I love you, Mandy, but when you told me this, I was like, "There's no way that's totally accurate. I need to talk to somebody else." So I talked to a guy who works at this broker. I asked him. He's actually a trader, so he does
He's an
actively
amazing
trade.
trader.
Really good trader. He trades CFDs. We talked through some strategies. That link I just showed you, those pictures, those
Mhm.
trades, those were not Jimmy's. Those were someone else. But
Nah, he's bigger than that.
yeah.
Jeremy, yeah.
Those are not Jimmy's trades. But yeah, he told me a lot more about CFDs. I got a good
Yeah.
understanding of them, a pretty good understanding anyway.
Mhm.
And if you want to use FP Markets, if you're in Australia, I will post a link in the chat pane below. Again, you can also email me. It'll also be in the description
Yeah.
box. It's something to at least investigate because, and that's go ahead.
How about we get Jimmy to run a training on how to use FP Markets to trade American stocks?
Let's do that. That'd be
Yeah,
fun.
yeah, because he is the best at it, and as I said, he's a very big trader, so he knows trading, he understands.
Okay.
The other thing, so someone asked why I don't use another broker. This broker is actually a market maker that you suggest, Richard. FP Markets are not market makers, so that's something really important to me. I know that they are not. FP Markets' interest is not to raid my account. The problem with market makers is that they don't need to put an order into the real life market. That means if you have a $10,000 loss, they pocket your loss. That's why I'm happy to lose $10,000, but it annoys me if my broker makes me lose $10,000 because they spike my position. I'm not saying that every broker does that, but there are brokers who do. FP Markets, they're not a market maker, so they are really interested in making sure that I stay alive as a trader, and hence they put on a lot of training. I train a lot for their clients because they want their clients to succeed. And also we're going to get Jerremy on to run a few trainings as well in FP Markets, I think. So that would be amazing.
Yeah, that's
Yeah.
something else. So yeah, me and Jimmy talked about working with some strategies and kind of showing here's how I approach things because he's a big fib Bollinger Band guy, and I use them a lot as well. But we talked about reaching out through the FP market, some of his customers, and me kind of showing how I trade and all that kind of good stuff. But there's a lot of good questions coming in the chat pane, and those are all for you, Mandy.
Okay, so I just get to them. So MXO, same. You can trade Forex through FP Markets, pretty much the same as everyone else. I use the MT4 platform for that. Just makes it a little bit easier. Same with the DEX. What about safety of clients' funds? John is asking. So absolutely safe, segregated accounts. The safety of clients' funds is something that I personally take really, really serious because we had a few brokers who went bust, like MF Global.
Oh,
And
I heard about that.
yeah, so I have actually a few clients who got caught in that, who had big accounts, like $1 million accounts, and lost everything. And one guy had to go back and teach tennis for $25, and he was a big trader.
No way.
Yeah, he was like a trader who would make $10,000 more profit a trade, and went back to $25 tennis sessions. So because he lost everything. So the lesson from that is that I never keep all my money in the account. It's really easy to add money to the account if you need to look after margin. I just keep, maybe a few thousand. Again, I don't need much margin, but I need to make sure. Actually, Jerremy, we should run another webinar on risk management and how to calculate your positions in CFDs, because it's very different to trading actual stocks. Yeah.
Yeah, well, here's a question, actually. Are you able to potentially try to take control of my screen? You're welcome to show me. We got time. We can learn right now if you want.
I'm not quite sure.
I know it's going to be, there's a, I'm trying to think what it looks like. So under our face, there's like a new share button, and then it says pause, and then there's a thing that says annotate.
No, I don't have that.
You don't
I
have
just
that?
have you and me. Yeah.
That's okay.
I think it really warrants a separate training, because it takes about half an hour at least to
that's fair.
train that. Yeah.
That's totally fair. So how to calculate risk on CFDs. Sounds good to me.
Exactly. Yeah. So in terms of safety of client funds, make sure you always keep a minimum amount. You keep the rest in your savings account, and then you just add as you need more margin or not. Yeah. So that's what I always do. I always take my profits out as well, just because that's the broker risk that we deal with. So yeah,
Great question, John.
Yeah, fantastic question. How will you compare CFDs to Forex? Is a question from MXO. Now, you have to understand that CFDs is an instrument and Forex is a market. So it's kind of like CFD is the car and Forex is the Ferrari. So you can trade CFDs in Australia. You can CFDs on everything: on sugar, on oil, on pork belly, on orange juice, on Forex, on indices around the world, the African rand against the Turkish lira, whatever it is, right? So Forex, again, is what you trade, the market that you trade, or the instrument that you trade, and the CFD is the vehicle you use in order to trade that market. Yeah, so that's the difference.
Yeah.
So I
like
also
this guy had he has some CFDs on some Forex positions.
Yeah. So that's silver where your mouse is, and underneath is gold. XAG is silver.
Okay.
He did really well here, huh?
Yeah, he did pretty good.
Yeah, and you can see, look at his balance. He's got $3,000 in the account, and he needs $450 in margin for, making $350 profit, $315 profit. I mean, look at the, the return on investment almost.
Yeah, solid.
It's a 10% on his money in the bank.
Yep.
Yeah. Now, I just want to go into advantage of trading options, because there is an advantage. And some of my big guys, the fund manager guys, they actually still trade options. And the reason for that is that you are actually able to, because of the time decay, and you would be better at that than me because I don't trade much options, but because of the time decay, if your option doesn't go in the direction that you wanted it to go, I think you can do other strategies on top of it, so that you either go out square or you still come out at a profit. And I know one of my friends, fund manager friends, he just did an Aussie dollar trade that where he got pinned, and he then just put other options on top, and he came out with no loss. So you can't really do that as much in CFDs. It's, even though you can put other, you can hedge your position, so you can go long and short at the same time, but that always ends up as a mess, I find. Did that make sense?
Yeah. Oh, totally. No. So that makes sense. I didn't even think about that, but I mean, I still like options. I'm not saying that I don't, but if you're starting out trading, I personally say go with stocks, make money that way.
Yeah.
Either buy or sell, right? There's nothing else. With options, you can buy to open, sell to open, buy to close, sell to close, different strikes, different expirations, different, implied volatilities and different Greeks and things like that. But yeah, with options, you can sell them rather than buy them. Can you sell a CFD rather than buy a CFD?
Yeah, you can.
Oh man.
You can go long and short on anything. On stocks, you don't need, how when you trade short on the underlying stocks, let's say you want to short Apple, you need to be with a broker who offers the opportunity or the option to the possibility to short the actual Apple stock. So they need to borrow from someone who owns an Apple stock
Yep.
so that you can short it. Really messy. With my CFD, I bring up the order and I press sell. That's all there is to it, you know.
Cool.
I love it so much. It's so easy.
Very, very cool. So before we go, some quick questions. What, as an American, can we invest in Australia, either a sector or a stock that you think is good for the next year?
You could have told me that you're going to ask me that question.
I know. I could have. I want to hide you.
I have no clue because I don't trade stocks, you know. I don't know.
Well, saying, is there a company right now that you think is coming on the scene that's interesting, or?
You know, the thing with the Australian market, number one, we don't have as many stocks as the Americans, and number two, there's a lot of penny stocks, and they're being moved really quickly, really hard. I can get you some amazing equities traders on for your next webinar if you want to, like prop traders that I personally know, they make a shitload of money in trading stocks.
Yeah.
But I'm not qualified to say that. Someone says renewable energy. Again, I don't know. I know that the marijuana stocks went crazy here, crazy.
Which stocks is that? Mariana?
Marijuana.
What is that?
Oh, okay. How do you say that in American? Can someone help me here? Weed.
Weed. Oh,
Thank
marijuana.
You. Thank you. Dope.
Sorry.
It was my German accent.
I thought it said Mariana. I was like, who's Mariana? She sounds pretty. Marijuana. Yes. Yeah. Okay. Richard types in weed. That's funny.
So
that is funny. Yeah, marijuana stocks. They went pretty crazy over here for a little bit too. What's the Australian index ticker again?
The ASX XJO.
XJO. ASX. I know it's on here somewhere.
It would be AUXJO.
I don't. Trading View is weird. This charting software is strange.
Oh, okay.
I've accessed it before. Jill, do you remember what it is? I know I trade with Jill often. Because I just wanted to look at the ASX before we left. I figured that would just be apropos.
Would it be so if you just put XJO?
XJO. Ah.
Yeah, that's the one. Yep.
There we go. Cool. So let's look at this. Let's see how I would trade this if I was trading the Australian index. So you guys haven't made that new 2008 high yet. Okay.
No. We didn't. No, we don't want to go into politics.
No, yeah. Look at that resistance. Oh man.
Double top, hey?
Yeah. Well, I don't know if it's gonna double, but it'd be big resistance for sure. I would say that would be a very easy.
It double topped on the daily.
I'd be going short, right?
It double topped on the daily.
Let me hop over here to the daily. So there's the weekly on the ASX. So let's hop over here to the daily. So the daily. Yep, a little bit of a double top action.
Yeah, almost complete.
Yeah, very, very pretty. Very pretty. So let's see where I would have my support resistance lines on the ASX. So I'd have one there. I'd have one there. So really, at present, I mean, it's coming down to a decent support. So again, it's one of the things where you're probably looking at the hourly chart. You might not want to buy here, but if it's going to bounce, this is the area where you would look to kind of start getting.
Yep.
But again, just kind of going back to that strategy. I mean, that's the thing is you never know the future. The main objective of all trading is just create a plan and follow it. But you've seen a few times if you played this support, it worked really well right there. And then if you went short, same place you went short right there, that one would have worked. And then if you went long here, it worked for a day or two. But let's say you got stopped out and you lost your risk. Now you're back at that support and you can try again. So, I mean, the thing is, ladies and gentlemen, trading, it's a beautiful game. I want to get us to here together, kind of talk about a lot of things, but really just say hey to all my Australian traders. Have another webinar with Mandi because I want to have another one because you're awesome.
So are you. Thank you.
Did you have any questions for me by any chance?
I just wanted to add one more thing, because you said it's the best way to learn trading is trade stocks first. And the other advantage is that you can trade on CFDs with so little risk. So when I mentioned before, I
True.
can trade an Aussie dollar contract with $2.50 margin. That is per pip I make or lose 10 cents. So you can see I don't lose much money whilst I'm training and learn to be a good trader.
Oh,
On
wow.
the XJO, I need, I think, $50 margin. And so one contract, again, for all the contracts that I mentioned, the DAX, these, the Dow Jones, one point move is I make or lose $1. So if I'm a newbie and I need to learn to read structure and get a feel for it and have fears, I don't risk much. I maybe lose $50 instead of $500. It's a massive difference when you have the family to feed.
Yeah.
So it's another advantage of trading CFDs when you're learning, when you're starting out, and to have it as an entry into options trading, because like options trading, you need to understand the structure of the market. Whatever instrument you trade, GAN, Elliott wave,
Oh, the
options.
GAN. Oh, man, I
It,
haven't heard of GAN in
but
forever.
it doesn't matter, right? It's
Yeah.
all about reading structure of the market. It's all the
Yeah.
same thing in the end.
You're
Just
totally
looking
right.
at it from a different view.
Mm-hmm.
That's it.
You're totally right. It
Yeah.
doesn't matter if it's
Yeah.
Forex, doesn't matter if it's commodities, futures, it all
Mm.
comes down to the end. And again, ladies and gentlemen, I mean, that's every program that that I'm here, man, you're here, we always talk about. That's the psychology. The hard part is
Yeah.
once you know what to do, the hard part is doing it, right? That's the hard part,
Yeah.
Eating healthy, working out, all that stuff. It's like, we know we can do it. Now you just have to. So this was
I do have a
awesome.
question. I do have a
Oh, yeah.
question for you.
Yes.
We talk a lot, you and I, but I never get to ask you this question. How does it work with your chat room? you know, maybe now is the time to ask you.
Okay. How does work with my chat room? What do you mean?
So, like, not chat room. Sorry, your trading room. You have
Oh,
a trading
okay.
room, right?
Yeah, I
And
do.
what time does it start? Because I usually sleep or trade myself, the
Do you have a
DAX.
trading room? I don't remember. Do you
No,
have
I
one?
don't. I
Okay.
don't. I don't. Yeah.
So
I mess with people's minds. I don't. I leave the teaching, the structures to
I like
yourself.
it. I like it. If you're here right now, type in a 1 if you attend the trading room, just so that we can see who's here. I know Linderman does and Jill does, and I have a trading room from Monday through Friday. The one that would probably be the most conducive for Australian traders, I have from 5 to 6 New York time.
Yeah, great. This is like 5 to 6. That is 8 to 9 in the morning
8
at
to
the
9 in the
moment
morning.
in
Yeah.
Sydney.
So I have 5 to 6 New York time, and I do record it. So that's a swing trading room. And really, the day trading room, I also have a day trading room, but we're day trading U.S.
Okay.
equities. I
Yeah.
have had some Australian traders there, but it is 9 New York time, 9 a.m. So I think that's you said it's 11 your time.
11:30, Julian says.
11:30. Yeah. So
That
11:30.
is
So
Adelaide, I would say.
it's
Yeah.
late. Exactly. It's late. So it's like I start off, we're day trading, and it
No,
doesn't really get started till
it's
11:30.
Adelaide.
But then we go until 2
Adelaide
p.m.
is Adelaide is a city. Sorry,
Yeah. No.
it's not
So
late. It's
so
Adelaide.
so it's late when you get older, man. I'm with you. I know it's hard. It's hard to stay up.
Adelaide is a city. It's not late.
Oh,
Ad-
sorry. Gotcha. Yeah, that's how my trading room works. How about I do this? So this is going to work out really well, actually, Mandy. I have a free week coming up in June.
Okay, cool.
Let me send
Can
you
I
that link.
attend?
And for anyone who's here, I'm gonna let you get access to that. And any of Mandy's followers, friends, fanatics, people love Mandy. I'll give you that link as well, and you can share that. This is we do look at U.S. stocks, but I can look at anything. As long as I get the ticker. Like for example, the ASX, I can pull it up and go, hey, this is where I would buy, this is where I would sell, this is why. I do all the analysis, and then I do record it and send it out at 9 o'clock your guys' time in the morning. I send out that recording. So maybe if you drive to work or you commute or whatever, you can click that recording and just watch it.
Or you can hide in the toilet for a few minutes and watch it. That's
Either
what some
one.
of my clients do.
Either.
I check their charts on the iPhone.
Whatever you want to do.
Yep.
For sure. But yeah, I'd love to have you though, Mandy. That'd be fun.
Cool. Yeah, that would be amazing. Thank you.
Yeah, no, thanks for asking. You're very
And also thanks for my guys. I always want to give them as much value as possible. So having them the opportunity to check out your room, I really appreciate that.
Yeah. Oh no, my pleasure. My pleasure. Thank you for doing this with me, and me and you will chat again soon to figure out what's the next one. If it's CFD risk mitigation or a broker walkthrough with Jimmy to figure out exactly what we can do. It might be either or both, but
both.
Both.
We want it all, Jeremy.
Let's do it. All right, Mandy. Thank you again.
Thank you as well, and thank you everyone who attended.
You're welcome, John. Thanks so much for being here. Sally, I appreciate it. S. Wong, thank you so much. Jeff Brown, Jill, all of my Australian traders. I just want you to know we really do care about you over here in the U.S. I know we're distant cousins, very, very far away, but I want to do my absolute best to enrich lives across the world. If you have any questions, you can email me, jeremy@reallifetrading.com. Chat with Mandy. Make sure to go to her website. It's a great website. We're going to give you more content. This is not the end, only the beginning. You guys rock.
Thanks, okay, bye.
See ya.